the MF Corner right here on the show, and today we look at the performance of star performers actually of the mid and small cap space. Dhirendra, CEO of Value Research, and our expert joins us today to tell us the reasons behind their performance and whether they're suited for your portfolio or not. Dhirendra, IDFC Premier Equity. It's a fund that everyone keeps talking about. It's hugely outperformed vis-a-vis the category in the longer term. Its performance has come under a bit of a pressure over the last 6 months. What has changed for this fund?
Actually, this fund struggled through 2011, particularly in the second half of 2011. And this is a fund which has claimed its, which has been able to derive its performance from being ahead of the curve. A very unusual portfolio. It is not a very, I find that this is a fund which has large number of stocks which I don't find in any other equity portfolio at a given point. And it has been right with most of its, being ahead of the curve choices. At the same time, there is one more thing which is unique to this fund, that this fund has periodically been closed to new investors, though it is an open-end fund. But it has prevented new lump sum investment into the fund at different time when it thought it was inopportune to attract money. And I think that has come in more, it has worked more to its advantage in terms of attracting money. That apart, I think, such a fund, the way it has been managed, it can go wrong, and that is what happened in 2011. But I think the recovery since then has worked nicely for the fund. It has a very small margin of underperformance if we look at the trailing 12 months. And I would say that the fund remains true to its. It's a risky fund, because if it doesn't work, if the hypothesis of the fund manager doesn't work, it'll prove to be a disastrous fund. But so far it has worked nicely.
Right. Dhirendra, the ICICI Pru Discovery Fund, that's another 5-star fund which has been a consistent outperformer as compared to the category average. What is the reason behind this track record according to you?
I think, if you look at the full market cycle, this Discovery Fund is primarily a value fund. It just happens to fall into our category of mid and small cap funds. It's not a mid and small cap fund by design, and being a value fund, the kind of stock it has, I think it had limited downside, because if based on the quality filters, it works on the stock universe, and then they had no room to go further down. They were generally out of favor, and I think this fund really does well over a full market cycle. As and when the market recovers, I think this is a portfolio which recovers far more smartly than a large cap portfolio or a large and mid cap portfolio with generic names. So in that sense, if somebody has this fund, it is important to keep investing and hold their investments here, even when it may not, the absolute return may not be very favorable.
Let's also taken some viewer queries. The first query is from Ridhima Gera, a homemaker in Mumbai. She wants to invest about 8 lakh rupees over the next 5 years. Should she invest in a bank FD or a debt mutual fund so that her interest income becomes tax-free?
If somebody is actually, below the taxable income bracket, and if one can earn, and if she will get 2 lakh rupees up to 2 lakh rupees of interest income, it will be tax-free. So in that sense, investing 8 lakh rupees in a fixed deposit might be a good idea, because she doesn't have to bother about the taxation aspect of it. It will be a tax-free income below that threshold limit. Besides that, I think she will also be more comfortable for a housewife who is making a selection, going to your neighborhood bank, choosing a term deposit of your preference for a period when you are unlikely to need the money in the interim. So go for fixed deposit in a bank close by.
Our second query today is from Naresh from Nasik, and Dhirendra, he says that last year he paid about 40,000 rupees tax towards the FD income, and he says please advise a debt fund that will help reduce the tax burden and perform like an FD.
I would say that debt funds are meant for exactly for people like him, not the housewife who is below the taxable limit, and somebody who needs predictable return, doesn't want to take chances with a view on the interest rate. I think short-term bond funds, they serve this goal best, and last year has been a great year for such funds, and I think this year so far it has continued to be good. I would say go for a short-term bond fund. If I have to choose some, I would say the UTI short-term bond fund or the IDFC or the Templeton India short-term income fund. They could be good choice.